Hi. Hi. We are from Group 5 and my name is Muhammad Azam.
My name is Aiza.
And my name is Muhammad Ridwan.
Based on the role-playing video shown, the shop owner was visited by an auditor to look at the company's income statement. When the auditor asked about the company's cash flow, there were several cash flows that were not recorded in the company's income, and this caused the issue of understatement of income. To make matters worse, the company's employees did not cooperate well with the auditor when the auditor asked for several receipts related to the company's cash flow. Unfortunately, the auditor had to give a penalty to the company. Therefore, the way to overcome this issue is to conduct a tax audit on the company. So, let's dive into the topic of tax audit.
What is a tax audit? Tax audit is a review or examination of taxpayers, business records, and financial affairs to ensure that the right amount of income should be declared and the right amount of tax should be calculated and paid in accordance with tax laws and regulations. The objectives of a tax audit. The main objective of a tax audit is to encourage voluntary compliance with the tax laws and regulations, and to ensure that the compliance rate is achieved under the self-assessment system.
Now, we move to the topic of tax audit implementation. First, pre-audit action, notification of audit. The audit process officially begins with a written notification issued by the Inland Revenue Board of Malaysia or IRBM. This notification informs the taxpayer about the type of audit being conducted, whether it's a test audit or field audit. It also includes the scope of the audit, the years of assessment involved, and the scheduled date and time of commencements. Taxpayers are expected to prepare all relevant records in advance and ensure that key personnel are available throughout the audit. Second is conduct of audit. The audit may take place either at the IRBM office, which is referred to as a test audit, or at the taxpayer premise, known as a field audit. During the audit, officer will review accounting record, supporting document, and observe business operation. They may also ask questions, request clarification, and document any issue related to tax compliance. It is the taxpayer responsibility to provide full cooperation, unrestricted access to relevant documents, and ensure that staff are available to assist during the audit. Next is duration of audit. The length of the audit depends on various factors, including the complexity of the case, the accuracy and completeness of the records, and the level of cooperation from the taxpayer. If important documents are missing or key personnel are unavailable, the audit may be delayed. However, IRBM aims to carry out audit in a timeline and professional manner, provided that the taxpayer responds promptly and cooperatively.
First, this is for record review and examination. In this phase of the audit, officers are given full authority to examine all relevant business records. For small businesses such as sole proprietorships and partnership, where proper business records may not be maintained, the audit officers may extend their review to non-business records. If records are stored digitally, the audit officer is permitted to access computer system, servers, or devices to retrieve the relevant accounting data. Under the Income Tax Act and other applicable tax laws, keeping adequate and complete records is a legal obligation. Next is the audit findings income tax. At this stage, the taxpayer may be formally invited to attend a discussion at the IRBM office to clarify any issues or provide further information. The taxpayer will receive a case review findings letter. This letter outlines the audit issues identified and the reasons and rationale behind these issues and any proposed adjustments. Taxpayers are then given a grace period of 18 calendar days to respond to the letter. Next, this is for the audit finding employer. When it comes to employer audits under Section 107 and Act 3 of the Income Tax Act, the process mirrors that of income tax audits but with a focus on employment-related tax obligation, such as monthly tax deduction. The employer will receive an audit findings letter with one of the three possible outcomes. The employer is compliant, the employer is non-compliant, or the employer is not eligible for monthly tax deduction obligations due to specific circumstances. For non-compliant cases, the letter will include detailed calculations of the monthly tax deduction amount that should have been deducted and remitted for each employee. As with income tax audits, employers have 18 calendar days to formally object to the findings by submitting new documents, clarification, or evidence. Finally, it comes to the audit resolution. IRBM will issue a case resolution letter. This letter will clearly state the adjusted income amounts, the final tax payable, any penalties or compounds, and the assessment years involved in the audit. Depending on the outcome, taxpayers will receive either a notice of assessment or, if no tax is due, no tax payable notification. For some tax audits, especially when the tax authority already possesses sufficient documentation, the findings letter may be skipped. The audit resolution period begins from the date of the document request letter for tax audits, the date of the site visit for field audits, or the issuance of the resolution notice for office-based audit. It ranges from 90 days for general audits up to 450 days for petroleum and large financial institutions.
So now let's move on to the rights and duties of the IRBM and taxpayer. So now we will look at the rights and duties of the IRB. The audit officer is required to adhere to the rules and code of ethics set by the IRBM in performing their duties. The first one is the audit officer need to be professional, well-mannered, and honest in doing their job. Next, audit officer also need to be knowledgeable and fair. Request document that relevant to the audit from the client. Next, the IRBM needs to ensure that the audit carry out smoothly. Next, the audit officer also responsibility to explain to the taxpayer on the adjustment. Last but not least, the audit officer need to guide and advise the taxpayer in order to minimize their tax payment. So that's all for the rights and duties for the IRBM. So now let's take a look the taxpayers' rights and duties. While an entity being audited by IRBM, the company need to give cooperation, fairness, and honesty to the IRBM officer in order to collect documentation. Other than that, the taxpayer need to provide access to the premise so that audit can be carried out smoothly. Other than that, taxpayer also need to allow the IRBM in examining and finding their records. Next, taxpayer need to prepare adequate and enough documentation for the audit process. Last but not least, the taxpayer also obligated to answer and give explanation or reasons required by the officer. So that's all the rights and duties of the taxpayer. Now let's move to the payment procedure. Any tax and penalties arising from the audit adjustment, the payment shall be made through the IRB payment counter. For payment of the tax and penalty, IRB may consider an installment for the payment. In order to pay in installment, the taxpayer need to submit an application form to IRB. And then if you fail to make a payment within the period, then a tax penalty will be imposed on the unpaid tax payment.
Next is offense and penalty. Under the Tax Audit Framework 2025, several offences are outlined to ensure tax compliance. Some examples include failure to submit tax returns and the penalty is fine or prosecution. Second is failure to keep proper records and the penalty is fine between 300 and 10,000 or imprisonment. Third is obstruction of the audit process. The penalty is legal actions. And last is furnishing incorrect returns. The penalty is up to 100% of tax undercharge. These offences are linked to specific provisions in the Income Tax Act 1967, such as Section 112 Subsection 1, Section 119, and Section 116. Penalty can range from fine to legal action depending on the nature and seriousness of the offences. Next is summary of penalty rates. The penalty rates imposed based on the number of offences. For the first-time offence, the penalty is 50%, while second-time offence may result in 30% penalty. Repeat offence or deliberate non-compliance can attract penalties of 45%. In case of tax fraud or willful default, the penalty can go up to 100%. It is also important to note that technical adjustments where there is genuine difference in tax interpretation are treated differently. However, the Inland Revenue Board of Malaysia or IRBM can use its discretionary power under subsection 124 subsection 3 of the Income Tax Act or section 63 of the Petroleum Income Tax Act to reduce or waive the penalty imposed depending on the facts and the taxpayer's conduct. When taxpayers voluntarily disclose their mistake before an audit begins, reduced penalty apply. For example, disclosing within 60 days from the filing deadline result in 10% penalty. Disclosure after 60 days is subject to a 50% penalty. If the taxpayer fails to remit tax or pay late, an additional tax payable is imposed. These reduced rates are based on subsection 113 subsection 2 as long as the disclosure is genuine and not under investigation. To sum up, the Tax Audit Framework 2025 provides fair structure and transparent guidelines for conducting tax audit in Malaysia. It promotes honesty and cooperation among the taxpayer while ensuring professionalism and integrity from the Inland Revenue Board. In this presentation, we have covered key areas such as audit notification, audit procedure, audit duration, and the handling of the offences and penalty. By understanding this framework, both taxpayer and tax practitioner can better manage compliance and avoid unnecessary penalty. We hope this presentation has helped you gain a clearer understanding on the framework importance in strengthening Malaysia's tax system.